This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, this is Joe Rabil with Invest Like a Pro. Going to go through the markets today. I'm going to spend a few minutes in a little bit more of a lightning round type of approach. I'm going to go through a number of different individual markets as well as a few sectors. So before I get into that, I want to make sure you're aware, go to stockcharts.com TV. My new show premiered yesterday, and it'll be out there on and available through YouTube or on their channel over the course of the next week. It's just the premiere of the show, so I don't go into too many stocks, but I do give a decent background on my, or give you a better idea of my background and my approach, and it might be worth viewing if you're a regular on this channel. Let's go ahead and get into the stocks and or the markets, I should say, and we're going to start with the spider. So again, not a whole lot has changed here. What I'm noticing is, despite the fact that the S&P has tried to push to a minor new high here, we're not getting any type of a budge out of MACD or ADX. They continue to drop off. So not really what I was on the lookout for. If we look at the weekly or daily chart, we made a minor new high and we have not budged. I mean, MACD has gone nowhere. Look at the divergence forming there. And then look at how low the ADX is down at 10. Really not what we're looking for like a breakout pattern. And it's not to say that we can't hold. If we go and look at the daily chart again, I mean, it's possible we're going to try and hold this area of support, 4, 15, 16, 17 without breaking it. And then if it makes another move to the upside, maybe it has a little bit more force behind it with volume. If that's the case, then, that would be sort of a constructive pattern. But right now, I don't see a whole lot here that's all that exciting. Now, if I look at the Qs, it's a little bit different. This was the market that really had kind of given back and consolidated and looked a little bit more tired. But as it turns out, it looked like all it was doing was just pausing and kind of maybe gathering some steam again. So what's taking place right now is we are breaking out. Now, we need to see confirmation on a MACD and ADX basis. They're always going to lag, though. So you got to accept that and recognize that despite the fact that this is at a new high and these are not at a new high, that is only potential divergence. That does not mean it's divergence. We would have to see price come back down, knife back down, through the breakout, coming back down this way. And if that were to happen, and MACD did not confirm and ADX did not confirm, then we'd have real divergence in place. But, as it stands right now, if this were to follow through, it's very possible we'll see confirmation from these indicators. So remember, we don't necessarily need the ADX to go to a new high. We just need to see green DI come up here and confirm by getting back above 25 and sort of breaking out again out of this move. So that's really what we're looking for there. IWM, I'm just going to keep this on the weekly because, you had this big move to the upside, and I had mentioned this. I still like the looks of this, but, as I discussed, when the MACD rolls over like this, sometimes it takes a little bit more time to get going. And I don't see, as long as we can hold, I think 220 is kind of like a key level right now. But if you notice, every time it's dipped down here, there's been sort of buying underneath. So I still think there's good support in place. I just don't think it's really ready to break out quite yet. So still constructive, but on the early side. Now, the Dow Jones is, again, more inclined to be affected by the value stocks, the industrials, financials, some energy and that type of thing. So they really got hit here recently over the last week or two. And I'm still okay with this because we're still above a rising 18-week. But we want to see and evaluate how it reacts at this line. If we were to break this line, then I think the value play might be in jeopardy for now. I don't think it's in jeopardy for the bigger picture, but it could be in jeopardy for now. And as I'll show you in a minute, we're starting to see a little bit more improvement in some of the areas like the Qs, the bigger growth names. So just something we want to keep in mind. Let's take a quick look at the oil. Oil, again, broke out above this 65, 66 area and is trying to carry higher. Now, this is not a great week so far. But it hasn't done a whole lot of damage at this point. And I still think the potential for this to move up is there, but we need to be on the lookout for some stronger type of a reversal pattern that might keep this back in the range in the 60s again. So just something to be on the lookout for. Gold has taken a pretty bad beating here based on what the Fed said, and definitely some selling taking place. Now, I don't know that that's really changing a whole lot. We still have a bigger bias in place, but because this is coming down so violently, we might be needing to expect, a little bit more of a pullback down towards this support zone here. It just looks like, based on how violent this was, that we need to do some downside testing a little bit. So that's probably what we should expect. Bitcoin is still holding the key level at 30,000. I think as long as it can hold 30,000, we're in a range for now. The 18-week has rolled over, and we have not come back down to the 18-month yet. So it could easily spend more time just forming in a range as those two lines kind of start working closer to price, unless we break the 30,000 mark. If we do that, then I think there's a lot more risk in place. Let's take a look at a few sectors real quick. So if you notice, the materials had made this huge run. Look at this monthly chart with this big run to the upside. Hadn't really had a down month. In fact, this is the first time we're taking out a monthly low in quite some time. And, there's a little bit of violence to this decline, a little bit of volume. It's not changing the trend. But in terms of the intermediate term, because we're still above a rising 18-week, which is above a rising 40-week. But on a short-term basis, the 18 is about to cross down below the 40 on the daily chart, and we do have some negative DI going. Look at the volume spikes over the last few days. This is real selling. Odds are we're going to come back down and test this high 70 area, and then probably have to form some type of an opposing trend pattern that develops potentially into a new trigger, if in fact we can actually hold this support underneath. XLE is doing somewhat similar to the oil chart, but I just want to look at the monthly here. Look at how we've made a pretty big rally, and we're starting to get into some resistance here on the XLE. I think it'll be a little bit more of a struggle for now until we consolidate a little bit more. There's really not a big change since the last time we talked about this, but I think it's still encouraging in terms of the momentum conditions. But we saw some selling today and some volume behind it, so it does look like it wants to take a breather for now. This is the area in terms of the financials. This XLF is probably the one that's taking sort of the biggest hit right now. We made a big uninterrupted run on the monthly chart. Basically went from 23 and rallied all the way up to 38. And I think now this wants to take a little bit of a breather. This is a pretty big reversal on the monthly chart right now. Now, we still have a couple weeks left in the month, so it doesn't mean it's going to finish this way. But so far it is definitely giving up a little bit. And we can see on the weekly, it's definitely giving back some of its recent gains. I still think the bigger picture on this is healthy, but just based on the price action, we should expect more consolidation in the near term. XLI is the same picture. I did want to show all these areas that are kind of taking a hit for the first time in a little bit of time. And the key thing that we need to watch on every one of these sector charts is how they react at the 18. If you notice, look at this XLI, held at the 18 here, held at the 18 here. Now we're back at it again. Does it hold or does it break? Because if it breaks, then I think a lot of the areas that we're discussing, if they break their 18-week, are probably going to take a little bit of time off, probably 2 to 4 months. Finally, let's look at the XLK. So this is sort of the confirmation of what we're seeing in the QQQ. We had this bend not break pattern, right, where it kept on looking like it was going to break it, but it never did. And just so you know, my break of an 18 MA is when you close below that line and then you take out the low of that line. So if I'm looking at this, I would have a break of this bar right here
would be where I would consider that a break of the 18. Now, this didn't even close below the 18 here, and didn't close below the 18 here, didn't close below the 18 here or here. So we didn't have any of these really considered a true break. And then again, look at what happened. Every single time you looked like you were going to close below the 18 week, it came back and closed above it. So we never really had a true break, or what I would consider to be a true break of that line. Now, if we fail here and we come back down and close below the 18 and then take out the low of that bar, then you have to consider this a full-fledged reversal, or what I would consider to be a break of this time frame. Now, MACD again has not confirmed, and ADX is pretty weak, so we got to be a little bit of suspect. I think you need to go stock by stock here. You can't just buy the XLK. There are stocks in this index that look really good, and there are others that look tired like this and don't look as good. So you got to be a little bit more careful from that standpoint. It's not the same as when the market was way down here and you could pretty much buy anything and make money. We're up in the stratosphere somewhat. It doesn't mean that we can't keep going, but I think you got to be a better stock picker. And that's the whole point of this channel, right? Learning how to be selective. So anyway, that's the update for the week. We'll see you next time. Make any comments or questions and hit that like button for me. Thank you.